Hi, it's Richard Hemming from Under the Radar Report. Well, it's been a big year and things in the resources space have really driven the returns for our subscribers, and that's what we're here to talk about with the critical mineral man himself, Peter Chilton. Welcome,
Hello, Richard.
welcome back.
Yeah, thank you.
You were early on into the critical minerals sort of discovery phase, I guess earlier than even before it was called critical minerals, and that drove a lot of big returns. Like in particular, Pilbara Minerals has returned something like 13 or 14-fold since we first tipped it.
Yeah.
But what are critical minerals? What defines a critical mineral?
Well, there's quite a range of different sorts of minerals. It's not just a handful, there's quite a lot. And the thing that defines them is that they're used in modern technical applications which are essential to society and to the country.
Like batteries.
Batteries is one
Well,
of
that's
them.
lithium, but what else?
Well, other critical minerals might include copper, nickel, cobalt, rare earths, graphite,
Right.
and a whole range of.
So it's got a critical application like in batteries, but also does it have defense applications?
It can have, oh definitely. I mean, rare earths, for instance, are used in defence quite specifically.
Yeah.
And I think that's an angle of critical minerals, is that they're seen as critical to our country because without them, there's a threat to either the productivity or economy or the defence aspect.
So we don't want to be too reliant. We're
So if you're reliant on China for all of one item, that's a danger for the country. So it's critical.
And I guess like there was an interesting article in the AFR recently that said that the critical minerals sector has grown from 8.6 billion to 86 billion in 10 years. Like they were saying, it was bigger than the gold space. So have the easy returns been, like we've got it in there early, but if someone's coming into it now, have the easy returns been made?
I don't think so. I mean, they're not necessarily easy to find, but I mean, in lithium, I mean, there's still projects coming on or potential, which got the potential, good investment potential, but you've got to find them and be confident about them. I mean, certainly lithium is going to be around and in demand for another 10 years or more.
Yep.
You know, as the energy transition occurs.
Yeah, so there
and then there's other things, rare earths, other commodities, which we haven't really looked at that much.
Will there be, like, I guess, winners and losers, and like to what extent, like how hard will it be to pick those winners?
It won't be easy.
Because it's quite complex.
And there'll be a lot more losers than winners. There'll probably be only a few winners.
Right.
And a lot of that depends on geology, finding the right resource.
Yeah. When you're looking at investing in the sector, would you be more prone to invest in the developers than the producers because the upside's bigger, or how would you feel?
It's both. I mean, producers have the advantage that they've got exposure to the commodity today and earning money. If you're in developers, you want to be in a developer that's already showing good potential to get into production. It's not just a concept, it's more the concept. There's a plan, there's a scoping study or feasibility study.
And we have been making money from developers.
Yeah.
Liontown.
Because they had the geology on their side, a big resource and a plan to actually get that into production.
Yeah. And is the technology sort of element of this space a lot more prevalent than you've seen in traditional resources like iron ore or even copper?
It is. I mean, iron ore is fairly straightforward technically. Copper is fairly straightforward. Nickel, relatively straightforward. With lithium and a lot of these rare earths, they're more chemicals.
Yeah.
You know?
So there's a lot more.
So there's a lot to it to get the refining and the right specification, the right quality.
Yeah.
There's a lot more to it.
Yeah. And I guess if you were to get exposure to those sectors, like in lithium, we've talked about it. We've got a stable of developers and some producers. Yeah. So, it's not. There's quite an array of choice. But with rare earths, like there's really just Lynas, isn't there?
Lynas is the only...
Lynas and Daylight.
Lynas is the only pure play producer.
Yep.
There is Iluka, which is
Right.
mainly a mineral sands producer, which has got building a plant to process rare earths as a byproduct.
Yeah. And Arafura.
And Arafura, which has got a plan and advancing towards production maybe within 3 years. There are others which are also reasonably advanced in terms of their concepts.
In terms of concepts.
Concepts and maybe pilot plants.
But do they have funding?
But funding's always the issue.
Yeah.
Funding's a big issue for these small companies.
Exactly.
And also technically they're quite difficult.
I guess that means that you need to do a lot more research when you've got that kind of that technological risk or that technology risk.
Especially for small companies.
Especially,
where
yeah.
If you're a small company, you've no room for error. If you get funding, if you've got technical difficulties and you need more funding, that's more difficult the second time round.
And like just quickly looking at graphite, there's really only been one winner there, hasn't there? Like similar to rare earths in
Syrah Resources.
Syrah Resources.
Yeah.
So are there there was a spate of graphite sort of companies.
There's quite a lot of graphite discoveries. You know,
because it's not that hard to
both
find.
in Australia and in Mozambique and quite a few places, Africa. But there's a difference between finding a deposit, even if it's a good deposit, and then to get it into production.
Yeah.
Might be political issues of stability in some of the countries where it might be, and there's quite a lot of competition, and it's always competing. In graphite's case, it's competing with synthetic graphite as well.
And like just moving on through the periodic table, copper has, I guess, we've had some success in copper, like Oz Minerals, but it's been taken over. So there's precious little exposure in the small mid-cap space for copper, isn't there?
I think there's probably a lot of frustration within Australia that there's very few what you might call really good copper plays after Oz Minerals.
Well, you've mentioned the big copper play.
Sandfire is but that's yet to really prove itself as a value type of copper stock. The big opportunity is probably BHP because they've got pretty much the largest copper resources in the world. They're not their biggest producer, but they're very
6% of the world's copper.
I mean they're a big producer, but there's a lot obviously. Global production's much more significant than they are. But what they do have is a leverage. They've got amazing leverage. If copper price were to take off, and it's a critical mineral, if you could go up $1 or $2, that makes a massive difference to their earnings. And that at the moment, iron ore dominates. You could see a situation if copper price were to take off that suddenly copper earnings become very significant.
Yeah, it was outlined very well in our recent blue chip report. Like like $1 move in the copper price means something like $4 billion to their bottom line.
It's incredible.
It is incredible.
Yeah.
It's worth reading.
Yeah.
I guess like when you're looking across the board at critical minerals, in terms of as a percentage of your portfolio, if you would include BHP in that, you could boost it to like 20, 25, a quarter of your portfolio. Would that be
that would probably be
strategy? That would be the maximum, yeah.
Because
including BHP.
Yeah. I mean, there's always more volatility in resources stocks because you've got the volatility of the stock itself, and then there's also the underlying commodity, which are inherently volatile, and the currency impact as well. So you just want to be a bit careful about how much exposure you have. But then on the other hand, some of these stocks might produce returns which are far greater than some of the other stocks you might traditionally have in your portfolio.
And that's what we're going to be talking about in our next issue. We're going to be going through the critical minerals and which sort of stocks Peter says would provide you with the good exposure to give you that access to what we're talking about, like the future, the technologies of now, but that are very much going to be a part of the future.
Yeah.
So thank you for joining Under the Radar report, and look forward to talking to you again soon.
Thank you.